What happens if we continue trading insolvent? So if a company is at the risk of going into insolvency and continues to trade without entering into a formal process, both the company and the director are exposed to some risks, particularly in respect of what's called antecedent transactions. Now, where an antecedent transaction occurs, that might be that a creditor is paid in preference to another creditor. And in that scenario, the ultimate insolvency practitioner who's appointed over the company's affairs would be able to reverse that transaction and seek relief from the person who received the money. Additionally, the director may also be at risk of action. The director may also be exposed to risk in that he may have been misfeasant in allowing the transaction to happen, and therefore the director may also have an action against him personally or her personally to recover the monies that were paid in the transaction. There are, however, circumstances where continuing to trade whilst insolvent is acceptable and certain transactions can be entered into without there being any risk. A good example of this is that if the company is on the verge of completing a major contract and completing that contract is going to secure a significant cash return for the company that would then be available to its creditors generally, those funds may require, there may be some expenditure required under that contract to complete it, maybe some final fees, etc. Those transactions likely could be paid because the ultimate benefit to the creditors would be worth it and justifiable. So it's very important in that scenario, or in any scenario where the company is at risk of insolvency, that the director seeks early advice so that they can understand what transactions they can and can't do in the run-up to the company's insolvency, what will benefit the company's creditors, what won't benefit the company's creditors, and that way it also minimises the risk to the directors personally for any transactions that they may bring. Where the directors have concerns that the company is facing insolvency, they should seek early advice to ensure that the transactions that they undertake in the run-up to the insolvency event are in the best interest of the company's creditors and will mitigate any risk against the directors personally, so that those transactions are not something that can ultimately be brought as an action against the director under their fiduciary duties to the company.